Hey guys, welcome back. You're still tuned into Trading Hour here on CNBC-TV18. For the markets, we are seeing a 92-point gain on the Nifty, so pretty much at the high point of the day. The Nifty Bank is also just about broken back into the green, so we're seeing around a 20-point uptick there. But it is the mid-cap index which continues to drag, so right now it is down around 0.4%. We will talk more about the markets in just a bit, but let's get some corporate conversations going. Our first guest on the show is JBM Auto. It's on our radar after the company posted a strong set of Q3 earnings with a revenue growth of 16% and operating margins of almost 11%. So to discuss more on the numbers, we're joined by Nishant Arya, who is Vice Chairman and Managing Director of JBM Auto. Nishant, thanks a lot for joining us. This is Pavitra. So, like I was pointing out, your revenue growth looks very strong. It's around 16% for this quarter. If I look at the 9 months of FY23 together, it's at around 35%. What do you envisage for the full year for all of FY23? What is the kind of revenue growth that you think you could do?
No, so we are looking at sustaining the same revenue growth which you see for the 9 months, which is about 35% on a YOY basis. So we'll be looking at more than 4,000 crores of top line for this financial year.
Nishant, your OEM division has seen a slowdown. Your revenues are down 34%. At the EBIT level, it's down 64%. What explains this?
No, so in different cases, when we deliver our buses to customers, so they push it out by a quarter or two. So on an annual basis, it would not make much of an impact. It is just a quarterly activity because when different depots and other customers are not ready to take delivery, they get deferred. But as a whole year, it is intact. And on the other hand, we are working on a strong order book in all our businesses, like the component business. The operating profitability has increased by about 50%, and the top line has increased by 22%. And similarly, in the tooling business also, the business has increased by about 15%. And this particular quarter in the tooling business has been the best quarter ever in the history of the company as well. So that clearly positions the company that in every business we are proceeding further with a very high growth opportunity.
But Nishant, should we read this deferral of your EV bus orders? Does it signal any kind of slowdown? Is that how you would read it? And what would be the EV order wins or the order pipeline, and how would it compare with 6 months ago?
No, so definitely the order pipeline is increasing. We are targeting about 5,000 numbers for the next financial year. And definitely there is no slowdown of any kind. And we are seeing a huge interest by all the customers and very strong growth opportunity. And we'll be emerging as a market leader in this space and really meeting all our customer requirements, whether in the private segment or in the STU segment.
Nishant, hi, morning. So I just have a slightly more futuristic question on EVs, and that's clearly a focus area for you. Now, as of 9 months, you've done a revenue of almost 2,850 odd crores. As the year winds up and you look at FY24, as part of your revenue pie, how much is going to come from the OEM business and from EV buses really? And what does that do to the blended margin of the company? Right now, you're just under 11%, actually 10.2% as of 9 months, I believe, operating profit margin. So what does the scale up of the EV business do to the blended margins, and what part of the pie, or what percentage of the pie will it be?
No, so definitely we would be looking at taking up the margins at a blended level up to about 12 to 12.5% for JBM Auto as a whole. And the EV business would definitely be crossing about 1/3 of the revenues for the next financial year.
This financial year itself, it'll be 1/3 of the revenue. And if you could just give a breakup, I'm just trying to understand. So total company level, you're targeting 12% plus margin. But EV buses, I mean, how do the margins compare with your core business?
No, so we are having similar margins or a little higher margins in the EV bus business, which you even see here. So about 15 to 17% is the margin level in the EV bus business, where we have our EV operations and EV manufacturing put together.
Okay, Nishant, since you're saying that this will come through by the next financial year, where it will be 1/3 of the revenue, can you tell us, ever since we spoke last, have you added any more EV orders? Because the last time we spoke, you said around 500 to 1,000 vehicles for EV and CNG buses is what, is the kind of order book that you had. Have you added more since then?
Yeah. So that's why I'm talking about the 5,000 numbers for the next financial year, because in the EV business, you take 6 to 9 months after getting the orders to execute them. And when they are larger numbers, then definitely the customers also have to be ready with the infrastructure as well as the people, the drivers, and everything else. So that is keeping that in mind. I'm giving you the whole purview of the next financial year for about 5,000 buses, which we're looking to deploy.
I just saw a headline in the papers today that BEST is looking to induct electric double-decker buses in its fleet, and the boarding should happen, just this week. Are you catering to this kind of demand? And also a word on the margins. Very interesting. Your EV bus margins are 15 to 17%. Will they stay at these levels?
Yeah, definitely. Because see, we are a technology-driven company, and as an organization, we are seeing that how we are delivering cutting-edge technology to our customers on an ongoing basis, and therefore our R&D team is developing new technologies, which is delivering higher level of efficiencies as well as very frugal solutions to the end customers, which is enhancing their total cost of ownership, which drives the profitability of the company here.
So EV margins should sustain at 15 to 17%. And are you participating in this electric double-decker buses opportunity?
Yeah, we are participating in multiple tenders of BEST and with different STUs across the country. And definitely we define our core solutions like recently with the similar to double decker, the coach which we have launched, which is India's first electric coach, which can do 1,000 kilometers a day. And so that has been our endeavor, that how technology can drive value in such cases. And clearly customers like BEST are looking for those kind of products.
All right, Nishant, we'll leave it at that today. Thank you very much for joining us. That is the management of JBM Auto talking about, their order book going forward and where they really see the year end. They are looking at a top line growth of 4,000 crores. EV bus orders have also really picked up, and for the next financial year, it should go up to 5,000. The stock is also up in trade, around 3% higher as we speak. We are going to get into a short break now, but when we come back, we'll talk all about the markets. Amit Khurana of Dolat Capital will be with us.
That's the boss's cabin.